The important thing is that crypto today is not the same market, of course, that it was back in 2020. Back then, there was no spot Bitcoin ETFs. Institutional access was pretty much limited, and also stablecoins were growing, but they were not yet central to the global payments conversation, and DeFi was still early. Regulation was unclear. Today, the rails are so much stronger. Bitcoin ETFs gives institutions a regulated way to buy exposure, and stablecoins are becoming part of the global money debate. And DeFi lending, tokenized treasuries, Oracle networks, and layer 2 infrastructure are pretty much mature in the crypto market itself. And the market structure regulation, including Clarity Act discussions in the US, I think could make institutional participation even easier as it progresses. So if a major outbreak fear escalates again, the first move could still be ugly. Bitcoin down, Ethereum down, altcoins down even harder, but the second move could be much more important, right? Because that's where the Fed is more likely to cut rates, liquidity will return, fiscal support expands, and investors will start looking for scarce digital assets. Crypto could reprice faster than any traditional markets, and now, to be clear, at the end of the day, the current Hantavirus headlines should not be treated as the next COVID. Public health authorities have said that the global risk is low, and Hantavirus does not spread like COVID under normal circumstances. So this is not a prediction that Hantavirus becomes a global pandemic. This is a scenario analysis, and the real question is, what happens if any serious outbreak fear returns to the world already dealing with a high debt, fragile growth, rate cut expectations, Bitcoin ETFs, stablecoins, and institutional crypto adoption? That is the macro setup worth watching. And if the pandemic market playbook repeats, I think the sectors that are to watch are not the random meme coins. The core assets would be Bitcoin and Ethereum. Bitcoin is the hard money asset. Ethereum is the settlement layer for stablecoins, DeFi, and tokenized finance. Then watch RWAs, tokenized treasury plays like Ondo, Oracle infrastructure like Link and Pyth, DeFi lending like Aave, or layer 2 networks like Arb or OP, high performance chains like Sol and Sui, and AI compute related tokens like Tau, Render, or AKT. And this is obviously what is trending these days. So in a crisis, digital rails definitely matter more. So the headline is not Hantavirus will pump Bitcoin. That is lazy.